Welcome back. Man Infra Construction reported a weak set of Q2 numbers. There was a fall in revenue and EBITDA. The company's pre-sales and collections are also sharply lower when compared to Q1. To discuss this, we are now joined by the MD, Manan Shah. Manan, can you explain this decline that we've seen in pre-sales and collections of Q2 versus Q1?
So basically, it's actually not a decline. If you see the profitability, it's substantially gone up compared to the last year-on-year quarter if you compare. And the projects which we are seeing, so basically we've not had any launches in the past 2 quarters because all the projects that we had in the portfolio were near completion, and the rest of the projects are due by the third and the fourth quarter of this year, where we are going to be launching some significantly larger projects which will impact substantial revenue and profitability as well. In fact, we have launched one of the project at Tardev, which is just out in the market last month, and we've received phenomenal response for the same. And I think we are going to see a good traction coming in the next forthcoming quarters as well.
So Manan, when you say that most of the projects were towards completion or closer to completion and you didn't have any new projects in the pipeline or launches for this quarter, does it mean that the projects which were almost complete are completely sold out?
So if you see the projects which are near completion or where we've received already occupation certificate, yes, that's nearly sold out, which is a very positive sign. And yes, the projects are there in pipeline, but a lot of them were at the due diligence stage initially in the starting of this year. And a lot of them were at approval status, which we've now received. So in fact, our Ghatkopar project has already received the IOD, which we had announced recently. And we are going to launch that project by the end of this year, in fact. And there's another project at Vile Parle, which is upcoming, which is also due in the last quarter of this year.
So, Manan, what will the quarterly run rate in that case look like for the rest of the year, second half and first half? Combined, what will FY24 bookings look like?
So booking-wise, we are seeing very stable and healthy numbers in terms of, we are seeing the profitability being absolutely stable at around 25-28%. And the kind of numbers that we are seeing is also in terms of top line is also going to be similar, where we anticipate that we are going to get nearly around a similar number you can anticipate in short.
992 crores in FY24 as well is what you mean? Around 1,000 crores.
In terms of top line, but the profitability, we are seeing a drastic improvisation, I would say.
Okay, what's the inventory in terms of ready to sell right now? Because you seem to have sold whatever has been nearly completed and the others are still in the process of you being able to launch. So as things currently stand, what's the inventory of ready to sell?
So see, the total portfolio that the company is currently having is nearly 5.9 million square feet. And out of which the ones which are near completion or almost ready, we've got hardly 5 to 7% inventory that's unsold. So the realization of these inventory that's already sold out will start flowing in now, as in when we deliver these projects. And the upcoming portfolio, like I said, out of this 5.9 million square feet, there are a couple of new project launches which are due in next 2 quarters. So you can say in a number around 3.4 million square feet is the upcoming launches.
3.5 to 4 million square. You said profitability will be significantly higher. Can you tell us what's the number?
So in terms of percentages, it shall vary, but I think we are comfortable on a 25% to a 30% of a margin line on the real estate side of it.
25 to 30%. You said that there are two focuses that the company has. One is improvement in cash flows, and the second is launch of new real estate projects, which will add to PMC margins. Give us a sense of what cash flows you're looking at right now, considering the collection quarterly run rate. And PMC margins are usually associated to EPC. If you can explain that to us, how will they aid real estate segment?
See, the collections are stable for the projects that we've already sold, more than 200 crores. On a quarterly basis. And in terms of, I would not mark the company on quarterly basis because automatically whenever there are new launches coming in, there's a significant surge in terms of sales and the apartments that are sold and the value that comes in that particular 2 quarters when it starts to get realized. But yes, the margins, why I'm saying is improvised because the size of the projects have drastically improvised. We are at multiple new locations, right from Tardev to Juhu to Vile Parle. And in terms of a lot of projects are at, the PMC margin, like you mentioned, in terms of a DM mechanism, where the revenue might not come in onto the books, but the profit straight comes in. So a lot of times you might see that the turnover is not there, but the profitability is shot up by 35%, in fact, because the revenue does not get recognized in our books. It goes into the books of the landlords or the DM partners, basically, which I would like to say.
Manan, we leave the conversation there. Thank you very much for joining in. Numbers coming in from Alchem Laboratory. Prima facie looks like a pretty healthy set of numbers with a little bit of a beat coming through on the top line. Get into a break. We'll come back with more on the margins on the other side. Stay tuned.